Tax controversy specialists versus general tax advisors. Which one is better for transfer pricing audits? Most businesses get this wrong, thinking any tax advisor can handle a transfer pricing audit. The surprising truth is that transfer pricing controversies require highly specialized expertise that general tax advisors may lack. General tax advisors provide broad tax compliance and planning services. They can prepare returns, advise on deductions, and handle routine inquiries. However, transfer pricing audits are complex, often involving multinational entities, intercompany pricing policies, and local compliance rules. Without deep experience, companies may face penalties, adjustments, or double taxation. Tax controversy specialists focus specifically on managing disputes with tax authorities. They understand transfer pricing documentation, defend intercompany pricing strategies, and negotiate with auditors and revenue agencies. For instance, during a cross-border transfer pricing audit, a specialist can structure responses, provide benchmarking analyses, and negotiate settlements that preserve the company's tax position. The key difference is expertise and advocacy. General tax advisors handle routine compliance, while tax controversy specialists anticipate risks, defend positions, and manage negotiations with tax authorities. Many multinational companies combine both. General advisors maintain compliance and reporting, while specialists step in when audits or disputes arise. The takeaway is simple. For transfer pricing audits, relying solely on a general tax advisor can be risky. Tax controversy specialists provide targeted expertise, reducing risk, avoiding costly adjustments, and protecting corporate value. The surprising truth is that early involvement of specialists can prevent disputes from escalating, saving time, money, and reputational impact.